What's up? Welcome back to Modern Traders. I'm Ben. Before we get started, I want to invite you over to the free Discord. We do have daily callouts, a bunch of resources, and monthly prizes just kicking in. So come check us out. Also, moderntradersllc.com and the Insta. And today we're talking about NIO real quick. NIO has earnings coming up on Friday. In case anyone doesn't know, NIO is an electric vehicle company touted as the Tesla of China. Lots of beautiful vehicles, battery as a service, charging, also NIO House, basically trying to catch up with Tesla as far as solar panels and smart home designs are concerned. But NIO, as most of you already know, is expected to more than double or triple in value in the coming years. But we do have earnings on Friday, and we do typically see a run up into earnings from this company as well as most. And we just wanted to have a quick discussion about options on how to play this coming up on Friday. Now, today we're seeing a nice pullback in NIO, opening the day at about $43, down about $2 at its bottom. So this is the time when we want to be contemplating the buy-in point for options or shares plays for the upcoming earnings on Friday. And you can see Deutsche Bank lowering their price target on NIO earnings. It's because, with most of the stuff gets priced in. So we have seen a rise up in NIO just recently leading up to earnings, which, is expecting the earnings to be pretty much what they expect. We're not really expecting a beat or a miss on it, just be pretty much at even expectations for these earnings. They expect sales of 7.44 billion, gross margin of 15.5%, both in line with consensus. Looking ahead, analysts think NIO's guide for roughly 22,000 deliveries in Q2 for the full year. You anticipates 95,000 vehicle deliveries, revenue of 35.5 billion. And like I said, most of this stuff is priced in, but since we are seeing a decent pullback and we do still have a couple more days until earnings, with a green market, you can expect to see a nice extension of this run up. And then, most likely going to be a sell the news event. If it does beat a little bit, could see a little running up after earnings, but would definitely not advise holding this through earnings itself. Now, looking back at earnings, the last 4 quarters, we do see a slight sell-off into earnings in the March report. That, however, is in conjunction with the chip shortage, which does expect to downplay the EV sector in general. And the November report is definitely a run up into earnings, small run up into earnings in the August report, and run up in the May report. And typically with a little bit of sell off afterwards. So you can definitely play this either way. You can play it as a run up into earnings, call contracts or shares, or you can play it as a put right at earnings if you want to anticipate a sell off afterward. But definitely going to be some opportunities here. Possibly play both if you got the skill. So just want to make sure you got NIO on your radar for the upcoming earnings opportunities. And bigger picture, I still see upside to 60 plus before the end of the year. But make sure you got an eye on it. Till next time, I'm Ben. This is Modern Traders. Thanks for stopping by.